Welcome back to Finance Historian Official. On this channel, we do not just talk about money. We talk about the hidden forces behind money. Today, we are uncovering one of the darkest realities of modern history, a reality most people are never taught. For the United States, war was never only about survival, justice, or freedom. Again and again, war became something else. A financial strategy, a system, a machine designed to turn destruction into profit. While ordinary people sent their sons to fight, while families struggled with rationing and uncertainty, another story was unfolding quietly in boardrooms and banks. A story where bloodshed created opportunity, where national emergencies reshaped global finance, and where conflict became a business model. To understand the world we live in today, the debt, the inflation, the dominance of the dollar, you have to understand how this system was built. That story begins in 1914 with the outbreak of the First World War. Europe plunged into chaos. Empires clashed on an unimaginable scale. Britain, France, Germany, Austria-Hungary all mobilized millions of soldiers and burned through weapons, ammunition, and money at a pace never seen before. Governments quickly realized that traditional funding through taxes and gold reserves was not enough. The war was simply too expensive. At that time, the United States stood on the sidelines, officially neutral, but neutrality did not mean inactivity. Across the Atlantic, American factories, farms, and banks saw something Europe desperately needed: supplies, food, steel, coal, weapons, and above all, credit. Wall Street banks stepped in as lenders to nations fighting for survival. Firms like J.P. Morgan became financial lifelines for Britain and France, arranging massive loans and acting as middlemen for war supplies. These were not small transactions. The sums involved were so large they exceeded the annual budget of the U.S. government itself, and every loan carried interest. Every shipment came with profit margins. Every explosion on the battlefield echoed through financial ledgers back in New York. War had created a new kind of market. By the time the United States officially entered the war in 1917, it was no longer just a military decision. American finance was already deeply invested in the outcome. If Britain and France collapsed, American banks would collapse with them. Suddenly, national security and financial survival became inseparable. War was no longer distant. It was personal, and it was profitable. Inside the United States, the government needed money fast. Taxes alone could not cover the cost. So a new strategy was introduced, one that would change history forever: war bonds. Citizens were encouraged to lend money to the government as an act of patriotism. Posters filled the streets. Celebrities promoted bond drives. Children were taught that saving coins for bonds was a civic duty. This was the first time an entire population was financially mobilized for war. Millions of ordinary Americans became creditors to their own government. On the surface, it looked like shared sacrifice. But beneath that surface, the real gains flowed upward. Industrialists expanded factories. Banks earned interest. Political influence concentrated in fewer hands. A dangerous precedent had been set. War could now be funded through public debt, managed by private finance, and sold as patriotism. This model did not disappear after the war ended. It became the blueprint. When the Second World War erupted, the system was ready. Once again, Europe descended into devastation. Once again, American industry surged. Long before Pearl Harbor, U.S. factories were already producing weapons and supplies for allies. When America officially entered the war, production exploded. The government did not hesitate. Massive military contracts were issued. Corporations were guaranteed profits. Efficiency became secondary to output. The Treasury issued war bonds on a scale never imagined before, and the Federal Reserve supported the entire operation. More than 85 million Americans bought bonds. Over $185 billion were raised. Think about what that meant. More than half the cost of the war was funded not through taxes, but through borrowing from the public. Sacrifice was repackaged as investment. Citizens were no longer just workers or soldiers. They were financiers of war. Meanwhile, corporations like Boeing, General Motors, and Ford transformed into military production giants. Shareholders collected dividends while the government absorbed the risk. War became an economic engine, pulling the nation out of depression and into industrial dominance. But something even more important was happening beneath the surface. The financial system itself was changing. During the war, Gold convertibility was effectively suspended. The dollar began to evolve. It was no longer just backed by metal. It was backed by American industry, American debt, and American military power. In 1944, as the war was still raging, global leaders met to redesign the financial order. The Bretton Woods Agreement placed the US dollar at the center of the global system. Other currencies would be tied to the dollar. The dollar would be tied to gold, in theory. In practice, the United States now controlled the system. War had destroyed Europe, but it had enriched and empowered America. Factories stood intact. Gold reserves were overflowing. Financial institutions dominated global lending. The United States emerged not just as a military victor, but as the financial capital of the world. At Finance Historian Official, this is where we pause and ask a critical question. Was this an accident? Or was it the result of a system that learned how to turn crisis into control? After 1945, the world did not return to peace. It entered the Cold War, and once again, military spending became permanent. Defense budgets soared. Entire industries were built around constant preparedness. Aerospace, electronics, energy, all thrived under government contracts. Economists gave it a name: military Keynesianism. The idea that government spending on defense could stabilize the economy and prevent depression. What began as an emergency measure became a long-term strategy. War readiness replaced war itself, but the financial machine never stopped. With every new threat, budgets grew. With every new weapon system, profits followed. Banks financed deficits, corporations expanded. Politicians gained influence. Ordinary citizens paid through inflation and debt. By the time the Vietnam War began, the system was fully mature. The conflict was sold as ideological, a fight against communism. But financially, it followed a familiar script. Massive military contracts, bond finance deficits, rising inflation. The cost was staggering, over $100 billion at the time. And yet, despite the eventual military failure, the financial system functioned perfectly. Contractors were paid. Loans were serviced. Interest accumulated. Inflation in the late 1960s and 1970s revealed the hidden cost. President Johnson promised both war abroad and social programs at home, guns and butter. The result was economic strain that could no longer be hidden. In 1971, the system reached a breaking point. The United States officially ended the gold standard. The dollar was no longer redeemable for gold. Money became pure trust, backed by state power and military dominance. Vietnam did not just change foreign policy. It transformed money itself. This will go deeper. Into oil, into the petrodollar, into modern wars, and into how this system still shapes your life today. If you are watching Finance Historian Official, you already know this channel exists to go beyond surface-level history. We uncover patterns, we connect events, and we show how money and power truly move the world. We'll expose how war became permanent, how crisis became policy, and why understanding this system is the first step toward real financial awareness. Stay with us. We uncovered how war and finance slowly fused together, how debt replaced gold, and how conflict transformed the United States into the financial center of the modern world. We take that story to its most unsettling conclusion. Because what began as a wartime necessity did not end with peace. It became permanent. After the Vietnam War and the collapse of the gold standard in 1971, the world entered a completely new monetary era. Money was no longer anchored to anything tangible. No gold, no fixed limit. The dollar became a promise backed by confidence, political power, and military reach. On paper, this gave governments flexibility. In reality, it unlocked something far more dangerous: unlimited debt. But there was a problem. If the dollar was no longer backed by gold, why would the rest of the world continue to accept it? Why would nations hold dollars, trade in dollars, and trust a currency that could be printed endlessly? The answer emerged from the Middle East. In the 1970s, global oil shocks shook the economy. Prices exploded, inflation surged. Energy became the most powerful resource on Earth, and quietly, a deal was struck that would reshape global finance forever. Oil would be priced exclusively in US dollars. In return, the United States would provide military protection and political support to key oil-producing nations, especially Saudi Arabia. This was the birth of the petrodollar system. From that moment on, every country that needed oil also needed dollars. Demand for the U.S. currency became global and constant. Even without gold, the dollar remained king. And behind that system stood American military power, ensuring its stability. Once again, war, resources, and money merged into a single structure. The United States could now run massive trade deficits, print money, and finance spending without facing immediate collapse. The cost was exported to the rest of the world through inflation and dependency. At Finance Historian Official, this is where we emphasize something critical. This was not just economic policy. It was financial warfare: control the currency, control the system. As the Cold War continued, military spending never slowed. Trillions flowed into defense budgets. New enemies replaced old ones. Proxy wars spread across Asia, Africa, and Latin America. Each conflict justified new weapons, new bases, new contracts. Then came 1991 and the Gulf War. Iraq's invasion of Kuwait threatened oil supplies and the balance of power in the Middle East. The response was swift and overwhelming. Militarily, the war was short. Financially, it was a gold mine. For the first time, war was broadcast live into living rooms across the world. Precision-guided missiles, smart bombs, night vision footage. This was not just combat, it was a showcase. Defense companies demonstrated their technology in real time, and markets responded immediately. Stock prices surged. Contracts multiplied. War had become marketing. Success was measured not just in territory gained, but in shareholder value. And the public barely noticed. The pattern repeated again and again. Short wars, long contracts, limited accountability, and always debt financing. Then came September 11, 2001, a moment that reshaped the world. Fear spread instantly, and with fear came blank checks. The war on terror had no clear enemy, no defined endpoint, and no measurable victory conditions, which made it perfect for the system. Afghanistan, Iraq, endless operations across multiple regions, trillions of dollars authorized with minimal resistance. The numbers are staggering. When you include long-term veteran care and interest on the debt, these wars cost over $6 trillion. That money did not vanish. It flowed upward. Into defense contractors, into private security firms, into reconstruction companies, into banks that financed the debt. Names like Lockheed Martin, Raytheon, Boeing, and Halliburton became pillars of the system. Not because they created civilian prosperity, but because they mastered permanent conflict. Once again, ordinary people paid the price. Taxes, inflation, reduced public services, rising national debt. Wars were justified as protecting freedom, but financially they protected balance sheets. And here's the most disturbing truth. From a military perspective, these wars failed. Afghanistan ended in withdrawal. Iraq collapsed into instability. Terrorism did not disappear. But financially, the system worked flawlessly. Contracts were fulfilled, bonds were sold, interest accumulated. Profits were secured regardless of outcome. Victory was optional. Spending was guaranteed. This is the moment where many people feel uncomfortable, and rightly so, because it forces a realization. The system does not require success. It only requires continuation. President Eisenhower warned about this in 1961 when he spoke of the military-industrial complex. But even he could not have imagined how deeply it would merge with finance itself. Today, defense spending exceeds $800 billion a year. Entire regions depend on military contracts. Politicians defend budgets not for security, but for jobs and votes. Wall Street profits from underwriting the debt. The Federal Reserve ensures liquidity. The machine never sleeps. And this directly affects you. Even if bombs are not falling, the costs remain. Inflation erodes your savings. National debt limits future opportunity. Public wealth is transferred quietly into private hands. This is why Finance Historian Official exists. Because most people are taught financial education at the surface level, budgeting, saving, investing, but very few are taught how the system itself operates. The same wartime tools used to finance conflict are now used during every crisis. The 2008 financial collapse followed the same pattern. Banks were rescued, corporations were protected. Ordinary citizens lost homes, jobs, and security. During the pandemic, trillions were created almost overnight. Stimulus packages were announced, relief was promised. But much of that money flowed straight into financial markets and asset prices. Stocks surged. Real estate exploded. Inflation followed. The playbook was identical to wartime economics: emergency justification, massive borrowing, corporate guarantees, long-term consequences pushed into the future. Crisis has become profitable. Volatility creates opportunity for those positioned to benefit. For everyone else, it creates instability and dependence. This is the hidden architecture of modern power. Debt binds nations. Currency dominance enforces compliance. Military presence ensures obedience. And finance sits at the center of it all. So what is the lesson here? It is not simply that war is immoral or governments are dishonest. Those truths are obvious. The deeper lesson is structural. The system is designed to convert conflict into capital, to turn fear into funding, to transform sacrifice into profit. And once such a system exists, it seeks continuation, not resolution. Understanding this changes how you see the world. When new conflicts arise, ask different questions. Not just who is right or wrong, but who is financing it, who is supplying it, who is profiting quietly in the background. When defense budgets increase, understand that inflation often follows. When debt expands, future freedom contracts. When crisis is normalized, control becomes easier. Financial education is not about predicting markets. It is about recognizing patterns. And history shows us those patterns clearly if we are willing to look. Empires do not collapse overnight. They hollow out slowly. Through debt, through endless commitments. Through systems that reward short-term gain over long-term stability. At Finance Historian Official, we believe awareness is the first step toward protection. You may not control global finance or military policy, but you can control your understanding. You can recognize propaganda. You can see beyond slogans. Because if you do not understand how money and power truly operate, you will always be paying the bill without knowing why. War is not just fought with weapons. It is fought with bonds, currencies, and balance sheets. And history proves this again and again. If this final part gave you a clearer perspective on how the world really works, then this channel is doing its job. Subscribe to Finance Historian Official because history does not just explain the past, it reveals the system shaping your future. And once you see it, you can never unsee it.